Hello everyone and welcome to ICM's midday session. In terms of economic indicators, we don't have like much of indicators coming out today, but the comments of the Boris Johnson, the United Kingdom Prime Minister, affected the market slightly. He was pointing for the possibility of walking away from the European Union without reaching a deal. So this just impacted a little bit the pound against other major currencies. While in terms of for speaking about indices, we had a big move earlier today. So the rally, the vaccine rally, is continuing on optimism that this vaccine could put an end to COVID-19 and just restore the economic activity to pre-pandemic levels. So let's start with applying some technical analysis on major currency pairs, commodities, and stock indices. So we start with the euro dollar, which was having a clear upside rally during the past couple of days. So we're witnessing a series of higher highs and higher lows. However, following Boris Johnson comments, we witnessed a bit of a reversal in the pair. So you can just highlight this trend line that we're currently trading at. So any break line, so you can just highlight it. So any break below this trend line could lead to a bigger correction on this rally that took place during the past couple of days. So the levels that you can highlight, you can just draw the Fibonacci retracement. We're currently trading at the 23.6. So you can just highlight the previous levels and make sure that they confluence with resistance or support areas. So you can pinpoint the 38.2, which is almost 118.20 and was a previous resistance. You can also highlight the 61.8, which was also a key support previously, which comes at 1790 ahead of the final and a key support for the week 1746. So these are the key levels in terms of a bigger correction. While still this point here, it's a pivotal, especially that was a clear area before when we had the first retracement following that big drop. So if you just want to highlight the coming levels to watch out for, definitely today's high is a must to see a price reaction when we come closer again, and then 119, 119.20 becoming also the other resistance area. So these are the key levels if you are trading the euro against the United States dollar. I'm gonna add the technical indicators so we can have a bit more of an insight. So you can see here we're just having the Bollinger Bands, they were opening wide, especially following a one-way move. And then we're having here kind of correction towards the middle line of the band. So as long as we're above the 100 and 200 hour exponential moving average and the lower part of the band, we're just still in a bullish scenario or positive momentum in the market. But when we trade lower them or past them, then this could mean that we have to reassess and maybe we're going towards a more bearish scenario. The British pound against the United States dollar. So as I said, Boris Johnson impacted the market with his comments. So we can highlight today's high, which was also which we highlighted earlier at 32.30, since it was a key support here before the push towards 33.50. And also when we were having a little bit of a drop, it was significant in terms of price action. So 32.30 remains a key resistance area ahead of the previous high of 33.10. While further downside could trigger additional drop. So here we found a little bit of a support near 31.60. So the coming support is near the previous low of almost 131.4, ahead of a bigger correction or a bigger drop towards previous levels near 29.40. We're just talking on bigger levels or through the end of the week. So these are the levels if you are trading the British pound against the United States dollar. The dollar against the Swiss franc was a bit weaker, and also against the Japanese yen. We had a bit of a rush towards safe currencies late last week. So the Japanese yen and Swiss franc, they just appreciated a bit against the dollar. So we're seeing a clear movement to the downside. You can just highlight this channel that we are almost trading at. So you can see how clear it is. We're just in this channel formation where you can trade any break out of this channel. So if you can highlight, you can just watch out for the sidelines of the channel. Also previous resistance near 91.60 and again at 91.95, 92. While support, you can just draw the Fibonacci retracement. So you can go for Fibonacci and just pinpoint the levels that do coincide. For example, the channel, we have the 90.86 and the 61.8 retracement, which is 90.60. So these could be the levels which could provide support on a bearish scenario. So these are the key levels if you are trading the dollar against the Swiss franc. The dollar against the Japanese yen, as I said, almost same formation that we're having. Following this consolidation, we're having a sideways move down. So you can also highlight this trend line that we're currently almost closing into it, and also another one combining the previous lows. So it's not a clear channel, but similar formation with a bit of variations. So watch out for the break above the trend line, which could lead to further bullishness on the pair, and maybe could drive us towards a rally towards 105 almost, and then the previous resistance zone, the previous top near 105.66. These are the key levels to target on a bullish scenario, while a further drop below 104.30 could trigger additional drop towards the 104 a 104 key level that was previously a key important or a key area for this pair for the dollar yen. So these are the levels for the dollar against the Japanese yen. The Australian dollar against the United States dollar, following the drop late last week, we were just witnessing a bit of a reversal and a continuation higher. The comments of the governor today were a bit dovish. He just stated that they could be reconsidering applying negative interest rates if other central banks are going forward to using negative interest rates. So this just he just revived some chances of the bank using negative interest rates in the future. You can also draw this trend line that we're currently trading at. So watch out for any break below the trend line. You can just draw two trend lines, the bottom and this one that we're currently trading at. So watch out for any break or a bigger correction on the Australian dollar, because it could trigger a further drop towards 72.60 area and then towards the interim low of 72.20, while a continuation or a break here above 73.20 could lead to a retest towards 73.40, and then this could clear the way towards a rally till 74.15. The New Zealand dollar against the United States dollar, following the correction late last week, we're just witnessing another pullback higher. So this is just a clear upside move with a slight correction that we are having today. So you can just highlight the previous zone 68.80, 69.15 as the coming resistance area, while support zone is just near the previous support zone near almost 68.10, ahead of the previous resistance, which could turn into support near 67.40. So these are the levels for the New Zealand dollar against the United States dollar. We're having here a divergence. It's a clear divergence, and the market dropped following this below the support. So we had a higher high, but a lower high on the RSI, triggering a divergence and the correction here. So watch out how this will evolve. The US dollar against the Canadian dollar. So you can, last week we highlighted the channel that we were trading at, and now we were able to trade back below the channel. So this is the channel that we were talking about, and we had this break, and now we're having a correction towards the 20-hour simple moving average, the middle line of the band. We found some support near the 100 and 200-hour exponential moving average. We'll watch out for any retest, because it could mean it could lead towards a bigger correction. So if you just draw the Fibonacci retracement, we had the correction towards 38.2, so another leg lower could drive us towards the 61.8, which is near almost somewhere between 61.8 and 76.4, so almost near the 130 psychological level, while a reversal here and continuation to the upside and a break above the 20-hour simple moving average could lead to a retest towards the upper line of the band near almost 31.80. Gold prices, I'm just going to pinpoint for something happening on gold. So if you see here, the market was dropped sharply following the headlines on the vaccine. So we had almost, if we just draw the vaccine movement, you can see the market retraced 38.2%. If you just go again towards, I'm just going to add the 88.6 level. So if we just add the 88.6 level also, you can see here that the market corrected exactly towards the 88.6 level. And then here we're having another move higher, which is almost looking like an upward channel that we're having. So this could be a formation of a new harmonic pattern that's being formed with the current Fibonacci level. So watch out how this wave, or where it could be the potential reversal zone, or the PRZ that we usually highlight in harmonic patterns. So watch out for any break back below the trend line, because it could lead to further bearishness and the drop. We can highlight also the previous resistance near 1884, which a break below the trend line and 1884 could add to losses to the bullion, and then we could trigger the key support zone between 1855 and 1850. So these are the key levels on the downside, while the resistance the current resistance continues to be near almost 1900, and then we can just highlight the previous resistance area near almost 1915, 1912. So these are the key levels if you are trading gold. I'm just going to move to silver, which had almost the same move. So we had this consolidation, then the market was able to break above the consolidation zone that we highlighted, and we had bits of retracements. So this is for silver. 2440 remains the key pivot or pivotal level. Any drop back below 2440 could lead to further bearishness and a bigger drop towards almost 2380, while a continuation here could lead to another retest. So a break above 2550 could lead to another retest to support area that was holding for a while near almost 2550. So these are the key levels if you are trading silver. The Dow Jones is having a bit of a push higher today. So we started the rally on Thursday, Friday almost, and now we're continuing higher. So watch out for this consolidation that's taking place, where if we lose momentum, we could be triggered towards a bigger correction. So we can just highlight this trend line here, that a break below it, so could mean that we're poised to maybe a lower low that could initiate a bigger correction. Also, the previous resistance zone that we highlighted is coming as support in the past couple of hours, somewhere here near 29,650. The coming resistance empty is at the previous high of almost 30,100. So these are the key levels on a bigger run. If we just need to have a clearer expectation, so where the market could be rallying, we could go for an extension and check where the 1236 could be, and based on the full move, the 1236 is almost near 30,000. If we just take the previous, if we just want to take the previous or the last move without the one that occurred following the correction, we can highlight the 29,900. So these could be the coming resistance levels for the Dow Jones, while support is near almost 29,600, as we said, and near the previous resistance near 29,370, and the key area remains 28,870, where a break below this area could lead to further bearishness and a bigger drop in the market. The WTI is having a bit of correction supported by the risk on market sentiment. So we almost stalled near the previous stop. So if you can just draw it, we almost stalled in this area, which is a key area where a trade or continuation above it could lead to a retest towards the previous resistance near 4240, and then the recent top posted 4320, while another drop below 4020 could trigger a bigger drop towards 3964. So these are the key levels if you are trading oil, and this is all for today's session. If you want to watch other live sessions, you can just subscribe to ICM Capital, where you can receive a notification when we are live again. I would just like to remind you that all the information, news, analysis, and opinions mentioned in this live session are only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. So this is all for now. Wish you safe trading for the rest of the day.